Good afternoon and welcome to your weekly FX Options Report. Today is Wednesday, October 28, 2009. As investors digest the latest earnings reports as well as economic data releases, U.S. equity markets continue to extend losses on the day. Meanwhile, overseas markets in Asia as well as Europe are also lower, adding to overall risk aversion. Now, ahead of third quarter GDP figures, which will be released in the U.S. tomorrow, we did get new home sales as well as durable goods orders this morning. Now, September new home sales came in lower than expected, down by 3.6% at 402,000. Despite the lower than expected figure, there was a rise in the median price of new home sales, which was up by 2.5% to $204,800. Meanwhile, durable goods orders for September came in higher, up by 1% from the revised decline of 2.6% seen in the month of August. Now, durable goods excluding autos was up by 0.9%. Now, taking a closer look at the spot FX market, both the dollar as well as the Japanese yen are benefiting from this risk aversion. Now, and they are also benefiting from safe haven flows. At the same time, the Australian dollar was the hardest hit amongst all of the currencies. Aussie dollar has continued to decline in the New York session, currently standing right above the 0.90 level. Now, the slower pace of third quarter inflation in Australia contributed to the decline for the Australian currency. CPI slowed to a 1.3% year-over-year pace from the 1.5% pace recorded in the second quarter. The latest data lowered hopes of a rate hike from the RBA next week of anything over than 25 basis points. Now, one way to trade your views on U.S. dollar strength or weakness is to take a look at ISC's FX options. One advantage is that they are U.S. dollar denominated. For more information, you can go to www.fxoptions.com. And now let's take a closer look at the major FX option pairs, starting out with Aussie, dollar Aussie, which is ticker symbol AUX. Now, the downside does prevail for the AUX, even though a continuation of the technical rebound cannot be ruled out. Its extent should also be limited. The preference of trading central analysts is short positions below 115 with targets standing at 105 and 102 in extension. And now let's take a look at BPX, which is dollar British pound. The downside does prevail and the pair is rebounding on its support, but it does remain under pressure. Now, the preference of trading central analysts is short positions below the pivot of 63.50 with targets standing at 60 and 58.70 in extension. Now let's take a look at CDD dollar CAD. Now, caution is advised for this pair, and the RSI is mixed and does call for additional caution. The preference of trading central analysts is short positions below the pivot of 108 with targets standing at 102.50 and 100 in extension. Now let's move on to dollar euro, which is ticker symbol EUI. In the short term, it is under pressure and the pair has rebounded on its support, but does remain within a bearish channel. The RSI is capped by a medium-term declining trend line. The preference of trading central analysts is short positions below the pivot of 69 with targets standing at 66.50 and 65.50 in extension. Now let's take a look at dollar Swiss franc, which is ticker symbol SFC. In the short term, the downside does prevail. The pair is posting a rebound, but its extent should be limited by its next resistance. The preference of trading central analysts is short positions below 104.40 with targets standing at 100.30 and 99 in extension. Now let's take a look at dollar yen, which is ticker symbol YUK. It is under pressure and the pair has struck against its resistance and should face weakness as the RSI is turning down. The preference of trading central analysts is short positions below the pivot of 92.40 with targets standing at 89.50 and 87 in extension. And next, let's move on to your segment on your trend opinion. Now, last week, dollar weakness began to lose downward momentum, and trading central analysts did take advantage of it and enter a long call on the PZO or dollar Mexican peso. This did lead to a 100% gain last Monday. And that does bring us to our portfolio performance. Now, thanks to that winning trade on the PZO, the portfolio stands at 1,252.98% since its inception in August of 2007. And since the beginning of this year, the portfolio is up by 621.99%. Now, this week, Trading Central remains short on the US dollar and on a weekly basis, even if this trend is weakening. Now, in the follow-up trade alert last Monday, Trading Central did recommend puts on the NZD as the pair does remain badly directed. Also looking at the EUI, the daily RSI is approaching a medium-term declining trend line, and the same is for the SFC. Now, the YUK is also worth taking a look at because its rebound should be limited by a new resistance on the upside. Trading Central analysts are also looking at the CDD as the daily RSI are approaching the medium-term declining trend line. Now, looking ahead to next week, it is a good idea to be cautious as there could be a stronger than expected US dollar rebound. Now, keeping that in mind, the PZO should be an interesting trade as it rebounded on its strong support and should reach its next resistance, which is set at 137.50. Also, Trading Central analysts are looking at exotic pairs such as the AUX and NZD, which do remain badly directed, and it may be good to take advantage of any rebound to go short. And that does wrap it up for your weekly FX options report. Thanks for watching, and make sure to tune in next Wednesday for your latest update.